Stop right now and look at this price, $85. That is where silver is trading today, February 6, 2026. After one of the most savage crashes most traders have ever seen, 41% gone in days. $122 peak late January, down to $72 bottom. Now bouncing back with noticeable strength to $85. Most people staring at red charts think the bull is dead. Precious metals are finished. The party is over. But hold on tight, this bounce is not random noise. The signals coming in right now are pointing to something very different. By the end of this video, you are going to see three major things the mainstream is completely ignoring. Three things that tell us whether $85 is a temporary trap or the launch point for the next explosive leg higher. If you are still holding silver or thinking about buying this dip, stay locked in. This could be the most important 12 minutes you spend today. Welcome to the channel that cuts straight through the headlines. If real-time breakdowns matter to you, subscribe right now and hit the bell. We are tracking this story every single day while it is moving fast. Let us jump straight into it. First, the quick recap so the rest lands properly. Silver did not rise gradually. It exploded. From around $30 early 2025 to $122 late January 2026, more than 300% in 13 months. Gold smashed all-time highs above $5,595. The rally had three huge engines. Central banks buying aggressively. Massive industrial demand from solar, EVs, 5G, semiconductors, defense, and a final speculative frenzy where everyone piled in. Silver jumped over 50% in January alone. Then everything reversed in one brutal week. Margin hikes, leveraged liquidations, algorithms selling into each other. Single-day drop of 37%, worst since 1980. Total wipeout, 41%. Silver touched $72. Panic was everywhere, but then silver bounced. 18% off the lows in days, now sitting around $85. Dead markets do not bounce like that. This bounce has real buyers behind it. So who stepped in? That brings us to the three things almost no one is talking about. Number one, the East-West price split is not disappearing. It is still wide open. Western paper crashed to $72. Eastern physical buyers paid 25 to 30% higher for the same metal. Even at Shanghai limit down, their floor was $12 to $18 above Western trades. That is strategic accumulation at scale. Number two, a major Western precious metals house just made a loud move. They relocated a major part of their operation to Asia, Singapore. Traders, systems, strategy, all moved. Institutions do not do that on a whim. They do it when the center of gravity has shifted east. Asia has the demand, reserves, and real premiums. Number three, yesterday's U.S. Critical Minerals Ministerial fallout. Delegations from allied nations, hosted by Secretary Rubio, goal: strengthen and diversify supply chains. Translation: we are vulnerable. We need to lock this down. Silver is central. It is consumed, used up forever, in massive quantities. 650 million ounces last year in industry. Solar panels, EVs, 5G, defense, all require it. No substitute at scale. World in supply deficit for years. Stockpiles draining. New mines take 8 to 12 years. Most silver is byproduct. That is the trap governments are waking up to. Possible outcomes: stockpiling programs, bilateral supply deals, domestic mining incentives, export controls, strategic designation. These are big moves. China already did it with rare earths. U.S. is now responding. Put it together. Paper silver crashed 41%. Physical barely flinched. Eastern buyers paid premiums. Western institution moved east. U.S. held emergency meeting on critical minerals. This is convergence. Wealth transferred from panicked sellers to patient accumulators. This is not the end of silver. This is the purge before the next leg. 1970s gold parallel, gold ran to $200, crashed 50% plus. Obituaries written, then went to $850, 400% from lows. Crash killed the weak hands. Same here. Silver from $30 to $122 crashed 41% to $72, bounced 18% to $85. That is shakeout. Industrial demand has not vanished. Solar cannot stop. EVs cannot stop. Defense cannot stop. Some buyers locking direct mine supply, that is a signal. Here is what I am watching. Official U.S. meeting readout. Any stockpiling or silver mention, Shanghai premium staying high. Price holding $85 and grinding higher. Dollar weakness or Fed hints. This is not advice, do your own research. Risk only what you can lose. But this does not feel like the end. It feels like the middle, the clearing before the trend resumes. Drop your take in the comments. Is $85 the floor or trap? Did the U.S. meeting change your view? Are you adding on this bounce? I read every comment. The sharpest takes come from you. If this cut through the noise, share it with one person who needs it. If not subscribed, hit that button now. We are tracking this daily. This is the hidden economy. I will see you in the next update. Thank you for watching. Stay sharp. Stay prepared.